Hello and welcome. It's time for Startup Fundraising Office Hours. I'm Scott Fox from the Startup Council. Tonight we're going to be talking about startups and raising money for startups and building businesses and making new friends with investors and customers, of course, as well. Trying to take the ideas that are stuck between your ears out into the world to make the world a better place and hopefully make you some money in the meantime as well. I'm Scott Fox. I'm the CEO of the Startup Council. This is a worldwide community service organization that I started after a long career myself as an internet entrepreneur and writing these books to help people around the world learn how to become entrepreneurs. These days, I'm mostly an angel investor. I'm an active angel investor based in Southern California. And I'm here today for you in Asia and Australia and India to try to help you accelerate your efforts to benefit from the information revolution that has benefited a lot of us here in the States and Silicon Valley, and trying to share some of that knowledge from sort of behind the scenes out into the world so that more people can participate. So if that sounds like you, you're in the right place. Thanks for joining us. As we get started tonight, we're going to be talking through a bunch of questions, and we have some investor pitches. Some folks want to practice, and all that's done in a friendly, fun way here at least once a month on my YouTube channel and on LinkedIn Live. So hopefully those of you who are backstage, can you give me a thumbs up? Can you hear me and see me okay? Looks good. Okay, thank you. All right, so that's always a hurdle we need to get over, of course. So as we get going here, we're going to invite those folks on camera and have them join us for our show. We'll be here for an hour or so taking your questions. And if you RSVP'd in advance, as I know JC and Jason and some of the other folks backstage did, they both want to practice their investor pitches. So they were smart enough to write in early. So we're going to help them out top of the show. And let's see who else is back here. Jason and David, Jeffrey. Let's see, Jeffrey, I think that rings a bell as well. Let's see here. Let's see, Jeffrey. I think you were one of our, from Bangalore. Jeffrey, was that you? Jeffrey, you're gonna need to turn on your camera if you want to play with us, but we'll get to your question as well. Here's an investor pitch also. Okay, so maybe we'll do 3 of those tonight. All right. So those of you in the wide world who are watching us, welcome. And hopefully if this is your first time here, you're welcome, of course. And if it's not, welcome back. This is a show that we do to provide, sort of the insider tips that I've learned after years of being an internet entrepreneur and angel investor. And we're going to be here to help you out every month. So if this is your first time, then please go to our YouTube channel and like and subscribe and all that kind of stuff so that we can help more people. That is the goal of this show. And we're not going to sell anything tonight. We're just trying to help you move forward. I do need to do a couple disclaimers and then we'll get to it. And those involve, of course, trying to find them. There we go. This is not qualified legal or financial advice. I'm going to give you the benefits of my experience, but that's all it is. You get what you pay for, and this is free. So please do consult your own qualified tax and legal counsel or experts in whatever field it is that you're investigating. And listen to them. Don't listen to me. I'm just some guy that you met on the internet. Similarly, this is going to be recorded. It's being recorded now. It's live online on YouTube and LinkedIn and Facebook. So don't say anything too confidential that you wouldn't want other people to hear. And we hope that this is a safe space in terms of us supporting you, but confidentiality is still a smart thing to do to protect yourself and the brilliant ideas that I'm sure you all are bringing to the table tonight. All right. So let's get going here with some, I guess we're going to do some investor pitches. So let me bring on the folks who are backstage and just check in with them. And if you are watching and want to get on, hold on, let me put that up as well. Oh, let's turn on the chat room, actually. Sorry. Let's put on the chat room. There. Okay. So, there's a couple folks here from England and New Zealand. You guys can't see that, can you? Hold on. Let's put that on. There we go. All right. So those will show up. There we go. So Julius from Brooklyn and Rachana from India. We're in India, Rachana. And Music from New Zealand and Best from England. Cool. Nice to meet all of you. Thanks for joining us tonight. I'd love to hear where you're from. You guys are already doing that. You must have been on the show before. Let me know where you're from and also how you heard about this, because we're always trying to adapt our outreach so that we can reach as many founders as possible. As many of you may have noticed, for years I've done this show at lunchtime in California, which is easy for me because that's when I'm having lunch. But tonight we're doing it on West Coast nighttime to try to help those of you who are in Australia and the Middle East and East Asia and India, of course. So hopefully that's helpful to some of you, like Liam. Liam's checking in from Sydney. And Omid is up late like me. Well, not too late, because I know, like Julius in Brooklyn, it's already after midnight, right? So you're a little later. And Rachana from Bangalore. Yeah, I was in Bangalore last month. Beautiful beautiful, busy place. Pretty impressive. And there's another Kurti from India, and aloha from Hawaii. Aloha. Is that Sean Feeney? Because Sean, you sent in a question, I think. So you need to do the other link, Sean. You're in the public chat room. You can do it here too. But if you wanted to come on camera with me, then you would have to find that other link. And I'm sorry, I can't do it right now. And then Hyderabad as well. Excellent. And Jason from Detroit, my hometown. Nice to see you, Jason. So you're in a different chat room. You're backstage, Jason, so they can't see that, but I'll pass along your good wishes. All right. So enough of the preamble. And I already gave you the disclaimers. So let's bring on the guys who, it looks like all guys here. Like I said, Jeffrey, if you want to join us, I need you to turn on your camera. So at the moment, first, we've got JC and Jason. Hi, guys. Nice to meet you. Let me just, okay, so there we go.
Hey.
And then, so who's who? Sorry, I clicked on, which one of you is JC? Hey, JC. Okay, nice to meet you, JC. And then Jason must be down there hidden by the, let me turn off that banner, Jason. That's crowding your face, isn't it? There he is, Jason. Okay, there's Jason. All right, and that shows our names too. Awesome. Okay, so as far as I know, you guys both wanted to practice your pitches. Does that sound right?
Yep, sounds good.
Okay. All right. Well, let's either one of you want to go first, or well, let me explain how we do this just for you and everybody else, and then you can decide whether it's still a good idea. It will be. Don't worry. So these are like 2-minute pitches. We're just going to do a verbal pitch. So if we try to get involved with PowerPoints and everything, it often crashes the system. So just talking. So I'd like to help you. Me and everybody in the chat room also is going to be offering critique, right? So hopefully constructive feedback, of course. Just so you can spell out in like 2 minutes or less, the business model and your ask and that sort of stuff. And we'll just try to help you get the vibe, and hopefully I can help you with some helpful feedback in terms of what, as an investor, what I liked or didn't like, and hopefully help you improve for next time. So nobody's writing checks tonight. This is just practice, but it should be useful for you. I hope it usually is. And everybody in the chat room, please offer them some critique as well. All right. So who wants to go first? Anybody volunteer? JC or Jason?
I can go first.
Okay. Good for you, JC? Okay. So let me turn off JC. We'll bring him back in a minute. And there's Jason. All right, Jason. So we're going to give you a couple minutes, and that's kind of it. I mean, I kind of know you emailed me a little bit already, which sounds cool. But why don't you tell everybody else, and let's see what the feedback is.
Yeah, so thanks for having me. My name's Jason David. I actually was on your show a couple of years ago before we had a co-founder, customers, revenue, all that stuff. And then I found out just from snooping online, you're actually from Metro Detroit, University of Michigan. So as I kind of built or started to become a part of the startup community, I put 2 and 2 together, and I just thought, hey, I saw the email, so I figured I'd do this. But I am the founder and CEO of GymForce. We are a platform marketplace connecting independently owned gyms with small businesses in the community. Starting in Southeast Michigan and then eventually expanding globally, right? We're thinking big. So we had to create the supply side of the network from the ground up. So we have 15 gyms in Southeast Michigan and Grand Rapids that pay us a monthly subscription. We advertise for them, and we are onboarding currently the first demand side customers that will offer their employees the option or the opportunity to join from our network of gyms. And we are going to subsidize that part of our network with a little bit of a cash incentive. Our small business customers pay a fee as well of $99 a month, so a little bit more than the gyms. And over time, as we learn from the employees as they join, that's what we'll use to develop our app, add features, stuff like that. So we're still pretty early. We raised about $60,000 or $70,000 in safe notes, and we're now moving from friends and family to more of the institutional investors in Southeast Michigan and a few in Silicon Valley. So I don't know if that's about 2 minutes, but that's
sure. That's about right.
As quick as I can do it.
Good. Well, nice work. Okay. Well, great. Congratulations. First of all, sounds like everybody give Jason a hand. If we were here, we would. You actually raised money. You actually have customers. So
a little bit. Yeah.
Yeah. Right. Well, that's where it starts, right? It's, you got to start somewhere. So that's very cool. Congratulations on that. So everybody in the chat room, what did you think? So chime in. And we've got a bunch of folks here. Let me just recognize Benjamin from Newport Beach, and Romano from Cape Town, South Africa, and Sean from Honolulu, and Jonathan from Columbus, Ohio, and Jabez from Singapore. So I guess this is really cool to do this at night, my time, because then we get this really unique global crowd. So welcome to all of you. So if you have suggestions on how Jason could improve his pitch, or JC will be up next, please go ahead and put those in the chat room. Okay, so my feedback on that would be interesting. There's a lot of competition in that space. So I think you would sooner need to get to how you're going to handle the competition. The biggest thing, though, is you pointed out a marketplace has two sides, which is great, because a lot of people have a great idea, they think, but they focus on either this one side or the other, right? And a marketplace is by definition two-sided. There's got to be supply and demand. And a lot of entrepreneurs get stuck because they think, I found this problem and I know a whole bunch of people that need this, but they don't know anybody that wants to buy it, right? So having the recognition that the two-sided marketplace is critical, right? That's a minimum requirement to even have a business in a space like yours, right? So that was great to hear that you have that, and it sounds like you're making progress on both sides, because it's pretty iterative when you do that. I've built a number of marketplace businesses, right? You need some supply and then some demand, then some more supply, then some more demand, and it takes time. So good for you, and it sounds like you're making progress. What I missed was exactly, and you don't need to answer me, right? We don't have time to get into a long discussion here, but I think you need to be more specific. What is it? Like, you didn't say till about 3/4 of the way through that it's an app. Like, I kind of figured it was an app, but you didn't say that. So I don't know unless you tell me, right? So we are an app. We go, how do I acquire customers? It sounds like you're going out to gyms and signing them up one by one. I don't know, but that's what we need to know. Like, what is it? How do you acquire customers? And what I'm really after is, who is the customer? Because in a model like yours, it could have been the individual. Then I heard you talking about small businesses. Then you talk about the gyms, and or maybe you're charging on both sides. I don't know. And that's what's most interest to me as an investor. What's the engine that's going to produce the money that repays my investment, hopefully, 50 times over, right? So that we call that unit economics. Like, for one unit in, what does it take to produce? And then hopefully it comes out, if it's $1, then it comes out $3 or $50. That's so that kind of equation. I'm working on a new book to complement the ones behind me here. And it is about fundraising. And one of my slogans is going to be, you heard it here first, is investors eat numbers. So you need to give us numbers, because if you don't, we'll starve. So everything you said was good. I would just triple the numbers, basically.
You mean the amount of times I said numbers?
Yeah, is adding any kind of numbers you have. I think you said we had 15 clients or something, but I didn't hear much about like cost of goods or a cost of customer acquisition, or you could probably do some growth numbers, because that's what we're
only had 2 minutes, though, remember?
Yeah, totally. Absolutely, man. No, I know, right? I'm asking for the 15-minute version in 2 minutes, right? But the sooner you put numbers in, like, as soon as any investor starts listening, they're listening for cues, right? So I need to know what you're doing. And then I need some numbers. We're trying to do spreadsheets in our head. That's all we're doing, right? So the sooner you give me a couple of numbers, I'm going to start doing calculations. And that's what you want us to do, right? Because you want that kind of engagement. So
the company is not an app. I'll just say that.
Okay.
The app is just the connection of the different sides of the network. The third side of the network, which is also monetized, once we figure it out, will be the arbitrage between the gyms and the small businesses. So I don't want to take up too much time, but just to clarify
that's fair. So that's good. So hard to do in 2 minutes, right? But hopefully some of that points you in a direction. So when you have 4 minutes, you can feel it even better. Yeah. Awesome. Okay. Well, nice to see you again. I'm glad you felt good about coming back. I hope that's helpful. And yes, I'm very involved in Detroit at the university and in downtown as well. We're going to be doing some things later this year and certainly next year around the Detroit area.
It's a growing ecosystem. They're doing great. So
yeah, and overdue for the renaissance that we were promised back in the 80s.
Right.
Right. So cool. Well, nice to see you. Thanks for coming. We're
thank you.
Move on to who else we got here. That was our friend Jason. Okay. And we've got JC and okay. Let me just for a second here. JC, you can go next, but let's bring on our friends Sean and Jeffrey. Hi guys. Can you Aloha. Nice. You're in Hawaii. Honolulu, was it?
Yes, Waikiki.
Okay, so you're up late. Well, thanks for being here.
Yeah, thank you.
Yeah, you're welcome. So can you and Jeffrey both just give me the quick version of what you want to talk about, and then we can develop a kind of an agenda tonight.
Okay, sure. Jeffrey, please introduce yourself as well.
Oh, okay. Hi, Scott. Hi, Shane. And so I'm Jeffrey. So I'm joining from Bangalore. I'm gonna talk about our phone which we are building. So we have built a complete phone with our own operating system.
Wow.
So the phone that predicts what you need before you know you even need it. And this is a brand new operating system. It basically learns the user behavior pattern of the user. So this is about what I'm gonna talk
Okay.
about.
So, and that's, you want to practice an investor pitch for that?
Yeah.
Okay.
I wanna
Perfect. Okay.
practice
Great. So
and
we'll come back and let you
see.
do that. Okay. And then Sean, I caught your name, but you were, oh, you wanted to talk about marketing, right?
Yes. Go about the go-to-market strategy for my app. It's a language learning
Yeah.
app, and then just like how to get make those things go viral and put incentives in the app to get people to share it, things of that
Okay.
nature.
That's great. Okay. So let's do all three of you. Who's up the latest? Jeffrey, Sean, probably. What time is it where you are, Sean?
Well, I'm 2 hours behind you, Scott. So it's
Oh, you're
7:45.
behind me, not ahead of me. Okay, so you're okay. So JC goes next because it's 12:30 his time. Okay, that sound fair? I was thinking you
Yeah.
were the other way. So, all right. So let's do that. Okay, JC, you want to do a little pitch, and then we'll come back to Sean and Jeffrey. We'll come back to you guys. All right. Hang on a second. So, all right. Hey, JC. Nice to see you.
Hey. Nice to see you as well. Got the little bit of the
Uh-oh.
sniffles, so excuse my voice if I sound a
Okay,
little
no worries.
congested.
All right, so you want to do the 2-minute pitch thing, and we'll offer you some feedback. And by the way, folks, I want to suggest to Jason, who just pitched, there's a bunch of feedback in the chat room for you about your pitch as well. So you might make sure you want to check that out. And everybody else, as JC tells us about scope focus, you can offer him some tips as well. Okay, go ahead, JC.
So I'm JC, co-founder of Scope Focus, and we're a community host. Where community hosts struggle to monetizing their engagement and keep their members active. Traditional platforms focus on connections but fail to create real economic value. After their events, engagement drops, connections fade, and they really don't have much metrics to go off of to create future programming. That's where we come in. So basically, we're an app that automates introductions pre and during the event. We track engagement and we turn networking into structured hiring and project execution. We keep communities engaged long after the events are over, and we provide hosts with real monetization strategies. We're going to generate revenue through 35% take rate of event ticket sales, 35% of job board and subscription fees from the recruiters, and usage-based pricing on project management tools. We have 3 communities right now that are validating Scope Focus, and they've each been able to increase their membership retention post-event by 30%. This is about a $2 billion market we estimated around 100,000 professional and online communities that are looking for this type of engagement, these type of metrics, and these type of monetization solutions. So you have like LinkedIn and other event platforms. They do a little bit of this type of functionality, but they don't basically offer like the post event and the post introduction data of the semantics on how their community are actually engaging, offering more surface type metrics. That's what really separates us. We just launched last week. I'm from Detroit as well.
I think we're about, that was 2 minutes. Go ahead and wrap up.
Yep. No, that was it. We just launched last week, and by Q4 2026, we'll be able to have all of our functionality in store. And at that point, we'll be able to pursue that $1 billion opportunity. So that's pretty much it.
All right. Excellent. Well, that sounds interesting. I run a lot of events myself or in partnership with people, and I totally hear you about the lack of engagement. Like you get all these people together for, a day or a weekend or whatever, and then they all disappear. All that work, it's like, geez, I've so many times I've been frustrated by that. So I guess the trick is the competition, because a lot of people have tried to do that. So I didn't hear much about competition. So, and again, this is 2 minutes. It's a very artificial constraint, right? But if you actually get into a conversation with an investor, I think you probably want to head that off, because a lot of people have tried different angles on this. And it sounds like you're kind of sitting between a number of other businesses, like a LinkedIn and an Eventbrite and this guy and a that guy, which also kind of means you got to be clear about what's unique about yours. Like, is there some proprietary advantage? You have some, I don't know, patent or some AI tool or something, why you guys, why now is a little bit what I'm left wondering. And I'm sorry, we don't have time to debate it because I'm sure you have good answers to that. But that's kind of what I'm thinking about that, because I've heard pitches like this. What I liked was, you got specific about the 35% on tickets and this and this. And this is what I was asking about Jason about, like, who's the customer? How much do you make? Like, this is a business, right? This is not this may be your dream, but for us investors, this is a business. So we want to know numbers. So even more numbers would be great. Specific examples would be even better, because I'm still a little foggy on what that engagement looks like. Like, are you I mean, I honestly don't know, because I don't think you said, and my apologies, because I'm doing a couple things at once here, but like some specifics would be even better. Like after an event, I don't know what it is, but we post on Instagram 3 times and we see a 36% click through, or like like some couple little line items of like, oh, okay, because I don't know what platforms you're operating on with what you said. It sounds like you're in between a bunch of them, but where are you? If you're not just on yourself, this is some social hooks, right? So that it's a little foggy to me, right? I hope that makes sense. And folks in the chat room, please give him some suggestions if you have them as well. The other thing, I guess, it would be real interesting to hear, since it sounds like you're pre-revenue, where you're going to start. Like, is there, I don't know, like Detroit, is it you're going to do the auto show, or is it, I don't know, your church, or I don't know, the Boy Scouts? Like, is there some angle you have, and why are you going to be the guys to win because you have this angle? Like, what VCs really want is some kind of unfair advantage, right? Like, like my dad is the pastor of the biggest church in Detroit. Okay, well, that's interesting. And he has a network of other pastors around the country. Okay, that's cool, right? Or, my cousin's an NBA player, same thing, right? Like, what kind of angle do you have would be differentiating, would be helpful. Is that useful stuff?
Yeah, absolutely.
Okay, good. What's the chat room saying? Anybody, let's see, good job framing the problem. Yeah, I think I agree with that. That was from Jason, the guy that just pitched before you. I'm having trouble seeing the chat. There we go. Let's see what else we got here. Let's see. Yep. Okay. Yeah, and then somebody suggests a simple script. I think that's a good one. This is also going to be in my new book. One of the things you want to do, and this is for Jason, for everybody, when you pitch, I think of a pitch like a life story. If you're sitting down for lunch with somebody and you have a half an hour, you'll tell them the whole thing, right? But you know it so well that you can compress it into 30 seconds if you just meet somebody in an elevator and they said, oh, what's your story? And you say, oh, well, I grew up, and you can just compress it immediately because you just know it so well, right? And that's kind of what you want to do with your pitch as well, with an emphasis on numbers and business metrics, so that investors can get excited about it. And then the last thing I would just suggest is, and again, you don't have a lot of time, so no shame, but think about what your ask is. I'm curious, what are you looking for? Are you looking for friends and family money, or you think you're ready for VC, or what's your thought on that?
We're definitely ready for angel money. We are pre-revenue, but that's only because we launched with free communities. Our ideal customer avatar is going to be paid communities. So obviously, if we're doing a take rate, then they're going to have to sell something as well, right? So right now, this is more. You have like a group called Compass that's located in Detroit, where they're kind of like a conglomerate of different communities. You have Black Tech Saturdays, which operates out of New Lab.
Right, Johnny's Heritage.
Yeah, exactly. So we're having these type of different groups beta testing with us right now, just so that we can get the functionality working.
Oh, cool.
But once we have all of that really solidified, and then we have something that's packaged where it really looks sellable, we have a pretty good idea of who we want to go after. And then, not taking up too much time, but I know our differentiation factor is this automated networking that we do. So basically you build a profile and then you can click a break the ice button. And rather than that first 5 minutes of a conversation in person that you have with someone going through the semantics introduction, it'll go through that for you and tell you, hey, here's ways that JC and Scott can collaborate based on what your profile says, and, kind of get to the nitty gritty of things and help you build out a project. Yep.
Cool. All right. Yeah. Well, it sounds like so I figured you had the answers. You just didn't have the time to say it. Well, okay. Right on. Well, that sounds good. I hope to meet you sometime when I'm in Detroit. And in the meantime, hope we'll see you here again. I hope that was helpful. And watch the chat room again. Anybody that has suggestions for JC, please let him know. That's why we're here, to help you.
Thanks for having me. Go Cass State.
Yeah, that's right. Did you go to Cass too?
Yes, sir.
No kidding. All right. Well, there you go. Well, we'll catch up one of these days. Nice to see you. That's awesome. We went to the same high school. How often does that happen? All right. So he mentioned connecting with people, and that reminded me that we're very active on LinkedIn. A lot of you tonight are watching on LinkedIn, I think. Is there anybody here from LinkedIn? Hopefully that's working. They are kind of wonky. Their tech doesn't always work, and I can't check it at the same time. But I hope some of you are on LinkedIn tonight. But anyway, so yes, you can come and follow us, the Startup Council, the organization that I run. And you can follow me personally as well, or connect. I'm happy to. Just put in a line about who you are so that I know. I get lots and lots of requests. But happy to connect with folks who are into the same things, right? That's what this is all about, is helping each other and really finding people with similar values and passions, right? Because then we can help each other. That's kind of my whole thing. And that's why I do this. I wanted to point out also, we have a couple private LinkedIn groups, which I always forget to talk about. But since I'm talking about LinkedIn, here we go. If you go to this, and I know that's not a real pretty URL, but linkedin.com/groups/1430941. That's a page that has several different groups that we have. We have one for entrepreneurs, one for investors, one for ecosystem builders, now all that kind of stuff. And we'd be happy to, have you join in there and meet more of each other, right? That's really what makes this work. Rising tide lifts all the boats, and hopefully the interactions there can be valuable to you, and it's free. So, all right, so that's that. Let's see. And I'm not seeing anybody on LinkedIn. Gosh, are they not working again? I hate to interrupt, but okay, well, anyway, I guess I'll focus on those of you who are here. So, all right, so next up, we were going to talk to a couple more folks backstage. We had JC just went, and Sean was going to be next, I believe. So here's our friend Sean. Hey, Sean, nice to see you. Aloha.
Hi, Scott.
As you
Aloha.
said. All right. So
yes,
you have a question.
Yes, and one thing I wanted to point out is I am viewing it on LinkedIn as well. It does seem to be working. There's 9 people.
Okay.
So
excellent. Thank you. Yeah, and there's a couple more just chimed in. Isuru Akalanka said yes, and someone else, LinkedIn user. Excellent. Thank you, guys. Okay. All right. So let me people are asking. Looks like we've got room for a couple more people backstage. Let me just put up the URL. If you're supposed to submit in advance, like Sean and Jason and JC did, and did we lose Jeffrey, the Bangalore guy? Okay, that's too bad. We'll have to come back in, but I want to put up the link for you can join us. Sorry, 1 second here. Where did that go? There it is. Jace, sorry. Okay. Oh, there you are, Jeffrey. Okay, hang on, Jeffrey. We'll get to you in a minute. Okay, so the rest of you, if you want to try to join us backstage with a question or a pitch, something specific, and you can do that, and then you can take Sean's place here when he and Jeffrey are finished. Okay, Sean, the floor is yours.
Thank you, Scott. This has been very interesting. My first time on the show, so this is really valuable so far.
Great. Thank you.
And so a brief background on my startup, and I definitely am interested in learning on the marketing side. But the startup is a language learning app, which is currently in beta as a web app exclusively, and it provides an AI personal tutor that engages you in natural conversations to get you comfortable speaking in a foreign language. So that basically came from my background. I actually went to high school in Capistrano, so not too far from you.
That's right.
So I never had been overseas before. I wanted to travel. I followed a lot of influencers, and the ones who could speak the foreign languages had such a better experience overseas. So it got me interested in studying languages. I wanted to learn them all. I ended up picking one of the hardest for an English speaker, which is Japanese. That brought me out to Hawaii. They have a great program here. And then I lived in Japan for a couple of years on exchange. And so I was getting really good at language, but then I came back to Hawaii and the pandemic hit. So I couldn't go back to class. I couldn't go back to Japan for immersion. And that's when I looked at online resources to help me. So I was trying those, popular apps like Duolingo, Rosetta Stone, Babbel. And I felt that although they were gamified and helping in terms of, flashcards and things of that nature, they weren't helping me with the main thing I needed, which was getting comfortable speaking and understanding natural language spoken to me. Mm-hmm. So I saw there was a gap there. They were using, old school rote flashcard and script memorization methods. So I basically started working on a project to help myself and my partner, and who's a CTO. And then basically ChatGPT came out. We realized that Gen AI, we could actually make this vision could work where we could take these proven linguistics methodologies that were only available to people through private one-on-one tutoring and provide that to the world with AI at scale in providing, even more benefits in terms of, no anxiety, and it's personalized to your level, and it can know exactly where you're at and respond and help you progressively improve in the foreign language. So that's where we're at. And we have the beta out now with some people using it. And
so what's your question?
The question is, with the stage that we're at now, we have different approaches we could take where we could market this directly to consumers or partner with schools and institutions and tutoring centers. But I think what we are most fascinated by is the direct-to-consumer approach. Mm-hmm. And if we were able to do that, that's what most of the biggest players here do. And if we were able to do that, then what can we do to incentivize people who are using it to share the app with their friends and to start to spread the word organically? So without having to raise a lot of money for marketing and those kind of other funnels to bring people in.
Yeah, I hear you. So I think you're observing something which would rhyme with my first piece of advice, which is, as an investor, we've seen lots and lots of people with ed tech solutions. I know that's not specifically what you're doing, but in a general sense, you're not an aerospace company, you're not a dating app, right? It's kind of ed tech. And so many of them try and die when they try to sell to schools, because schools are just bureaucratic nightmares and they take forever to make decisions, and they're political and the budgets get cut, right? So I think you're wise to maybe try the direct to consumer route, just because it's one-to-one, right? As opposed to all this process. So I don't know if you knew that or not, but that's a classic investor take, is when people come to us and say, we're going to sell this, we have this great thing, we're going to sell to all the schools. Investors go, oh no, not schools. Not that we don't want to help the schools. I mean, but we all know the schools need help, but it's just it's a quagmire, right? So so that I'm with you on that. Okay, so then you're asking about a K factor, or as people also call it, a viral coefficient. So for those who don't know, when you are selling something the way Sean is, that especially if it's consumer adoption, but it's also true for B2B, but the classic cases with consumers, you want to, like, I want to sell something to Sean, and then hopefully he'll tell his friends, so that if I sell it to him once, I'll end up with more than one new customer, because then he tells his friends, right? It's the old, remember the shampoo commercial decades ago, she told two friends and she told two friends. That's the viral coefficient, or a K factor. Is that fair, Sean? Did I cover that correctly?
Yeah, that sounds what I've heard. Yeah.
Okay, cool. So the idea is that you want your viral coefficient, or your K factor, to be more than one, because it means if I sell Sean and he buys it and then we're done, then that's kind of, I have one customer, right? You want it to expand and keep growing, or shrinking, right? You don't want it shrinking, but you have to count for churn, because what we're really talking about is the SaaS business, a software as a subscription, recurring subscription, like Netflix, right? You're paying every month, and Netflix hopes that it has more new subscribers than people that cancel. And that's that's a positive churn coefficient, I guess you'd call it. But ideally, you can put it out there and people are so excited, they all tell their friends, and it goes viral by itself, like a good TikTok video, right? That's what Sean's asking about. All that wasn't even the answer. That was just helping everybody understand what we were talking about, because I saw a complaint earlier that we were getting too technical. So Okay, so if we're on the same page, so what will we do about that? So first of all, everybody in the audience, I don't have all the answers. There's a bunch of you online. If you have suggestions about how Sean can take his app and make people want to use it and spread the word for him, essentially free, he'd love to hear them. That's why he's here. So my ideas would be a couple. I'm a good talker, so we could talk for a long time, but we'll have to keep it within time limits. So I have two things occur to me. One is a lesson I learned maybe 10 years ago. There are a lot more people who are first-year Spanish students than there are fifth-year Spanish students, right? So target the onboarding. That is where there's going to the market is going to be 5 to 50 times larger than the advanced students. Even though the advanced students might really be into it, not most people are going to like move to Hawaii to study Japanese like you did, right? They're going to be casual users. So you need to make it easy to attract as many of those as possible. That would be one. And then the other, of course, and I think you know this, but the trick with viral marketing is to give people something that they value. And it's even better if they value it enough that they want to share it. So is there some incentive that you can pass, that I can give you a discount, but then you can pass a discount along? And here's the key to it. It's best if the viral thing makes both of us look cool. I know that sounds weird and it's hard to quantify, but like, it's like a party, right? Or a new nightclub opens, right? And I get an invitation because I'm on the VIP list. And then I give you, I can get you in. Well, we both win because you think more highly of me. I can think more highly of myself. And then we both get to go to a party, right? It's like that kind of like 1 + 1 = 3 is really the idea. And that all comes from, I'm looking down here on my bookshelf. I don't see it. There's a book. This comes from, yeah, here it is. Seth Godin wrote a book 25 years ago. And this is literally a paper printout of it because I don't know that he ever actually published it as a book. But this is where the term viral marketing comes from. It comes from this book. And he invented the concept of, you sneeze and he calls them sneezers. Like you sneeze and give somebody else the virus and then they tell their friends. That's from here, like literally.
Wow.
Yeah. So anyway, I don't know if that wasn't very specific, and because I don't know your market very well, but I would be thinking about something exclusive, something that's fun, that doesn't just do them a favor, but makes me look good too, right? Like that's the key, because then I look good by giving it, not just as a generous gesture, but it's kind of exclusive, like a nightclub invitation. And maybe you can noodle with that, especially if I guess I would also suggest the kind of like what I was saying to JC a few minutes ago. What's your beachhead market? Like maybe if you're doing Japanese as your first language, maybe there's something interesting in Japanese culture, right? Because Japanese love to give gifts, right? And they wrap things really well. Or, maybe there's some virtual version of that you could kind of ride on to make your vibe or your brand viral, right? Like Duolingo has that owl, but, maybe you've got something that sharing is exciting to both the giver and the recipient. So I don't know. Is that helpful?
Absolutely, Scott. Yeah, no, thank you for that. That's given me a lot of frameworks to think about.
Okay.
And if you ever have the chance to, release that Seth Godin paper, that'd be amazing.
Yeah, I don't know. You could Google it. I mean, I printed this out. I don't even know when, but it's called the Bootstrapper's Bible. And
Okay.
I wrote it there on the spine as I printed it out many years ago. You could probably find it because I'm an author myself. I don't rip off books. This was available for free at some point. So maybe it's still out. But Seth has a whole bunch of great books. I don't know if anybody, I'd give Seth Godin, Godin, fabulous author, but he's written many books. So you'd have to find the right one. So.
Awesome. Thank you so much, Scott.
Okay,
I really appreciate your time.
Nice to meet you. Hope to
Aloha.
see you again. Tell your friends. That was our friend Sean from Honolulu. And now we're going to go over to Jeffrey, who is in Bangalore. And then I know a bunch of you are talking in the chat room. We're going to, I'll go back through the chat questions as well. I see something about crowdfunding, for example, or TikTok videos. We can talk through a bunch of those things. But I would suggest also, by the way, I put up my LinkedIn, and you're all, like I said, welcome to you're welcome to click on mine, but go ahead and put your own in. Like you can connect with each other. I'm not doing any gatekeeping here. The whole point of this show is no gatekeeping. I'm trying to help you all help each other, right? Because there's only one of me. So yes, go ahead and connect, exchange your email addresses or, business plans or whatever it is. All that stuff, help each other rising tide lift all the boats, right? And if, by the way, if you think later and you have a question, something occurs to you, you can come back to the YouTube channel and put your questions in the comments, and we'll try to follow up there as well, because that leads to the ongoing dialogue, right? Because we're really just trying to help with everybody. Help everybody, I should say. And I should put in a quick plug. Startup Council, this is our organization. Come over here if you're not on our lists yet. Like if you heard about this through Meetup or LinkedIn or something like that, we have all kinds of services that we've built, most of which are free or at cost, trying to help early stage founders. So if that sounds like you, come on over. We'll try to help you. And we're about to launch a big new one I can't even talk about yet, but I'm pretty excited about it. So you want to be on the email list, trust me. We're going to help everybody worldwide if we can. Okay, so that was Sean, and now we're going to talk to Jeffrey, and he is in Bangalore and has a new phone, I think. So he was going to want to jump right into a pitch there, Jeffrey, or how do you want to proceed?
Yeah. Hi, Scott. Hi, everyone. Okay. I'm Jeffrey from Bangalore, south of India. So now, actually, I want to say about two businesses what we are running. So one is already profitable from past 5 years, which is developing mobile apps, and now we started AI services for Indian markets. We have several Indian customers. Now we are looking for a partner and investor to enter into US market, where we are targeting especially LLM models like AI services for businesses in US market. So that's the first pitch. And about that numbers, like we are already making around $95,000 as revenue, and we raised the first round in this business $30,000. Now we are raising the second round $100,000 for the US market. So that's about the first. And second is which is a pre-revenue business. We are developing our own phone with our own operating system, the phone that predicts what you need before you know you even need it. So how does it work? Basically, it learns the user behavioral pattern, and based on it, it searches the right tools and applications from the internet, directly bringing to the user in daily basis. So how does the user benefit by this phone? By using these tools and applications, he can implement in his profession and career, leading him to prosperity and freedom. So this is not done. Why this phone is needed now? Because now the phone doesn't has that future. So in your phones, you have to depend on the word of mouth applications, means which you got referred by your friends. So you are repeatedly using the same social media application again and again, which is leading the humanity to stagnate. With Jelly's phone, it's gonna change. They're gonna discover the right applications and tool in daily basis to become the better version of themselves. So we wanted bold investors, because it's a challenging project, bold investors to join us and take the humanity forward. So
Wow.
so that's what our second one is.
Cool. Well,
yeah.
Congratulations. That's very ambitious. Good for you.
Yeah.
That's cool.
Yeah, that is. Yeah.
That's cool. Are you
Thank you.
are you a hardware guy or an AI guy, or why you?
So actually, I'm a software guy. So we have the MVP prototype of this phone, and because as you remember that I said we have another business which is making revenue. We have a team member of 25 members in that. They all are hardcore software developers. So with them, we have made this operating system, and now we want a bigger team to finish this project. The phone project. So that's why we are raising money for that 2.5 million. And we are going outsourcing hardware to Taiwanese company, because we are not a hardware expertise, but we have testers. So, we are going to send the team to the hardware Taiwanese partner and execute this phone. So we are looking for investor for this too.
Right.
So investors have basically two options. So they can select already making revenue business, which is profitable and we're giving dividends. And second is the challenging venture, the phone venture.
Yeah. Okay. Well, so that's a lot. So let's talk about the phone one, because that's more unique, I think. You started to address my big question there was going to be about. Well, let me back up. You gave the vision very nicely. Like I can see, that's really interesting point. Like every time I get a new phone, I have to like figure out myself, what am I going to download? And like, I might pick the wrong one or something that was not secure. Right. I mean, there's risks involved. Right. And it's far less than optimal. And you're right, that makes sense. The AI would do that. So that's interesting. What I didn't hear though was the business. So if you want to talk to investors, we need to know about the money side of it. And you didn't say much about that. And I know it's early stage and that's hard to tell, but you need to say something more than I want $2 million, right? Because for what? So that was why at the end, my ears perked up again. You've mentioned Taiwanese hardware. Okay, that kind of makes sense. So you're going to have partners over there. Like, it needs to be less vision, more business, I guess, is how I would think about it, right? So what you said was very interesting. Like in an elevator, if we only had 2 minutes together, that would have been about right, because it would have been, oh, that's interesting. Well, let's have lunch and talk about it, which is what you want. Like with all these pitches, the main thing, remember, you're never going to get a check after one pitch anyway, right? You're going to hopefully get another meeting where you can unpack more. So you need to hit the points that get to the next meeting. And if that doesn't include anything business, fine, because you got the next meeting, you win. But my advice is more like, what would interest me as an investor, because I've heard so many of pitches, is like, okay, I got the vision. Like, figure out how you can, take the vision bit and make it like 15 seconds. Oh, that's interesting. And then hit me with the business. We need $2 million because we're going to contract with a Taiwanese manufacturer, and that's going to cost $1 million. And we have 14 people doing this and 10 doing that. And between those, we have some patents over here. And together, we think we can get to market for $2 million. And then there'll be another round in 3 years of $4 million more. And by then, and all of that leads to an exit of this, right? Like I was saying earlier, you want to think of like an equation, because investors, I want numbers, like how much, for how long, how often, how many, what kind of margin, and when do I get my money back, right? That's all I'm really interested in. Not because it's not a cool idea, but you're doing your job is the idea. My job is the money, right? And it's especially true for venture capital investors. Like, I'm an angel. If I write a check, it's like a personal check, right? Like I invest in you, or I buy a new car, like it's personal money. But for a VC, they have been given their money by other investors, like insurance companies and universities and stuff like that. So they have to invest only to make money within the parameters that they agreed to when accepting that money from their limited partners. So they literally it's not even worth their time to talk to you unless they're certain you're going to make money, right? Money is all that matters. Now, they'll have a thesis, like this firm is into aerospace and this firm is into medical devices and this firm is into hardware. Like, they'll have some specialties, but it's got to be about the money. It's not just they're greedy, it's their job. So if you don't speak the language, if you spend all your time talking about product and vision, we're left starving, because we need to talk about business. That's why we're here, right? So is that helpful? Like, just the kind of mindset?
Yes, Scott, you're right. You're absolutely right. So I missed the business part of it.
Okay.
So here we are raising the money, $2.5 million for completely the execution of the complete phone. One is like with $1 million, we're going to finish the phone, including around like 7,000 units. And then the remaining 1.5 million is completely for marketing, because in this business you need a ruthless marketing.
Okay.
And we already have the marketing plan ready for it. So with this, we are targeting around the sales around 7,000 units to be sold in the first financial year. And once we create the awareness, then we have the opportunity to raise more funds to manufacture more products, and also to partner with multiple companies for customization, because this phone is focused on productivity. Now the two types of phone what we are holding is completely focused on entertainment. That's why we are not able to find the tools for our profession and career. So we are going to partner with the corporate companies to custom make for their employees, which can make them more smarter and more productive. So in this way, we can make a lot of money. Yeah.
Oh, that's an interesting angle. Okay, yeah. Well, we probably need to move on to some other people, but it sounds interesting. The other piece you'd have to address is competition, right? Because obviously the big handset manufacturers are not looking for competition, right? You've got Samsung and Apple and Google, whoever. So how? And we don't have time to talk about it now. I presume you have a plan, but you should mention
that one sentence. Can I add in that? Big companies, Samsung, Oppo, Vivo, all these are using only one operating system, that is Android. So basically, you pick any type of the phone, they have the Android 14 version. So there is no difference except the cameras, right? And the other type of the phone is Apple. So you have only two types of phones. So it's just two people in the market.
Right. So you would be a third. Is that what you're saying?
Yes, because we are a new operating system.
Right,
So
right.
in that way.
So that,
It's,
and I don't know that market, but that sounds scary to me. Like
yeah.
that's, wow, that's ambitious. It would be really cool if you could do it. But so you must have some secret sauce, or you have some relationships or something. That differentiation thing, I think you got to pull that up to the front, because anybody that says they're going to try to compete with Apple, like, wow, okay, good luck, right? That's ambitious, but it's good, right? And also because you're in Bangalore, like maybe there are things that are different about the Indian market, right? Because you could launch it just in India.
Yeah, we are launching not in India. We are launching only in US in the initial start. Yeah.
Oh,
So I have been in talks with some of the US investor.
okay.
So they have a lot of tie-ups with T-Mobile, Verizon, AT&T. So they are interested in this. So maybe if everything goes well, we'll launch it.
Excellent.
Yes.
All right. Well, that's exciting. That's one of the more ambitious projects I've heard lately. Awesome. Well, I'm glad you're here. I moved the time. I was in Bangalore last month, and I hadn't been there in a long time, and everything is like bigger. It's like I'm so busy now, and I thought, well, I need to do some of these at night to help more of my Indian friends. So I'm glad you're here. Thanks for coming.
Yeah, next time when you're here, just let me know. I'll take care of we
Right.
can have some lunch. Yeah.
Yeah. Awesome. Well, nice to meet you, Jeffrey. Excellent. So I hope, I'm wishing them the best for sure. That's an exciting thing, right? Pretty ambitious. Love that, right? Take on Apple and Google with their Android. Good stuff. Okay, so let's what time is it? Wow, we're almost an hour already. Well, I'm going to run back through the chat here. So folks, if you have some things, clever things or complaints in the chat, let's just buzz through those and see what we can do to help each other a little more. And thank you all again for being here, of course, from all over the place. Hyderabad and Sydney and Newport Beach and Cape Town and San Diego. And okay, so there's some nice feedback here for the various pitches. Yes. Okay, I thought I saw some questions here. Let's see. I know there were. Okay. Yeah, Dr. Kim Vanderlinden. Yeah, Kim says, would crowdfunding or GoFundMe capital raises be appropriate for a new cancer screening test? If so, any advice on how to use social media to expose our technology? Yeah, so yes, the crowdfunding world is fascinating and growing, and I think very exciting, both for investors and especially for founders, because you can go directly to your customers, right? I am literally an investor in WeFunder and StartEngine, two of the big platforms, because I think it's such a great opportunity to help everybody get a piece of the pie, right? And I think that yes, crowdfunding can be used in lots of great ways. I particularly like the way WeFunder coined the term a couple of years ago now, called a community round. And if you have a community of your own, like you have a pizzeria, a restaurant, and you need to, I don't know, redecorate or whatever, you need some money, you can ask all your customers, to take a little equity in your business and help you fund your expansion. I think that's just lovely, right? I mean, that's the way the world should work. Of course, for a bigger company, it gets more complex and more regulatory and so forth. But I think the key there, Kim, is the community side of it. Crowdfunding is an excellent vehicle for raising actual money, for sure, but it does presume you have a bit of a community of your own already. So I think you know that, which is why you're asking this in this way. So to your first question, would crowdfunding capital raise be appropriate for new cancer screening tests? And I would say absolutely yes. I think it could be appropriate for almost anything that is legal because yeah, it can allow people to get involved, and that's a good thing, right? More customer engagement is a win, generally speaking. The second question, though, is really your question, right? If so, any advice on how to use social media to expose our technology? And that is the key to this, right? A crowdfunding campaign only works if a bunch of people show up and want to invest. So that means that you have a mailing list of your own, a community of your own, hopefully that's already interested, et cetera. The platforms like WeFunder, StartEngine, Republic, Dealmaker, so forth, they're great administrators, but they're not really marketers, right? Their offer is not that they're going to bring you investors. Their offering is that they're going to run the investment process for you if you bring your own investors. So anyone that's listening to this who's curious about crowdfunding, don't kid yourself that if you sign up with one of those companies that suddenly they're going to raise the money for you. That's not really how it works. There are great people there, and I can make introductions there. Actually, there's some links. I should put this up. There are some links on my site that because I'm involved with several of those platforms that you can save there's some incentive. I think you can list with them for free or something. Here we go. Startup funding recommendations. This page has lists of several of the angel groups that I'm involved in, as well as the community round crowdfunding sort of services. And there might be some savings for you if you go through those links, right? So, so Kim's real question is, how does she build an audience? That's really, I think, what you're asking, Kim. And I think a lot of people in this audience could probably in the chat room offer her suggestions. If it's a cancer screening tool, which sounds great. And I saw your email. Too bad you didn't come into the chat room. I think you were one of the people that RSVP'd. Yeah. Kim's thing can screen for lung, breast, colon, and prostate. They have 10,000 patients. It's where it's working. And they only need $1 million. There's 20 published peer-reviewed clinical trial studies already. I mean, pretty impressive metrics here. And you're in San Diego. Okay, well, let me come back to San Diego, Kim, because that's actually a great place to be for this. But for social media, it's really about building an audience. And that is a much longer discussion. You could read my second book, this one, eRiches 2.0. That's about building social media audiences in plain English. It's really about offering value or entertainment or information. I would think that you probably have, I guess where I would start is looking for communities of cancer survivors or cancer victims that are probably out there already. You know, like Reddit, I'm sure has cancer groups, and there are probably private ones, supporters and things like that. And probably the associations which raise money, the charities for each of those, you know, for lung and breast, each of those have their own big charities and associations and conferences. I would try to get involved with those as a volunteer or a board member or a sponsor, let people know you exist, and try to build traffic that way. Another good angle is podcasts. You can get out on podcasts and blow your horn about what you're doing, or even host your own podcast. That's an underappreciated angle to build an audience. So all of those things are worth doing. That's probably more detailed than we have time, but there's folks in the chat room. Oh, okay. She has a follow-up here. I thought crowdfunding may be appropriate because of the emotional impact of finding cancer early. For sure. But again, that the platforms aren't going to do that for you. You got to, who is it emotionally impacting, right? You got to find those people yourself. It's a BYOB sort of situation, BYOI, I guess, for investors. Bring your own investors. And if you are a doctor, I guess with your title, this may not be your wheelhouse. There are agencies, certainly, that you can pay to drum this up for you as well. That depends. I don't know what your cash flow situation is. But you can pay, I'm really roughly guessing like $10,000 to $100,000 and hire an agency to make some noise for you. Yeah, that's probably all I've got on that, unfortunately, because it's a great question. But I want to come back to San Diego real quick. I was in San Diego a couple weeks ago for the TechCon SoCal. I was speaking there on a panel again, which I do every year in San Diego. And I'm always impressed by the huge life sciences community that's in San Diego. So if you haven't already, I mean, if you're a doctor in San Diego, I presume you know some of this, but there are lots of organizations in and around San Diego that help startups. And I would talk to New Fund, which is NUFUND, New Fund, which is the former Tech Coast Angels. I'm part of Tech Coast Angels here in Orange County in Los Angeles. But New Fund is our former TCA chapter in San Diego, and they spun off on their own New Fund. And I'm not a life sciences guy, so I don't know quite as many, but there's a lot going on in San Diego. So if you haven't already engaged with the startup scene there, I would go find some meetups and sign up for some mailing lists, and you can definitely engage and I would think find some support for what you're doing. It sounds great. So sorry that I couldn't be more specific there. That's a whole book in itself, like I said. Oh yeah, eRiches 2.0. Sorry guys, I see your yes. So this is my second book. This is from 2009 though, so it's not totally up to date anymore, obviously. But it's a real step-by-step guide, like how to use YouTube, how to start a podcast, that kind of stuff in plain English. Back when this stuff was new, it's not new anymore, right? So they certainly could write new books about it, but that's a pretty good one. If you're new to this kind of world, it might be a useful book still, just in terms of the strategy of how to think about it, even if the tools have somewhat changed, right? Okay, let's move a little faster here. I'm going to I'm going to turn into a pumpkin here. Gets much later. So, okay. Hagate is here. Hey there. How are you? Hi, Scott. Is there? No, that's not how I do it. Hold on. I'm going to put you up on the screen there. Oh, that's a good one. Hold on. I'm going to put this up there. Rachana says, how does the K factor work for B2B? So the K factor, or is the viral coefficient we talked about a couple of minutes ago with Sean Feeney from Honolulu. And it's the same idea. You try to sell a customer and hopefully they do some more selling for you. Essentially, that's really what it amounts to. So you give them some kind of incentive. And like I talked about, with Sean is, a framework. I talked about some frameworks, and you can, by the way, these sessions are recorded. If I said something smart, if I accidentally said something smart, you can rewind and watch it again, or watch it at double speed, right? If you want to find something. And I think you can get a transcript off of YouTube pretty easily these days as well. So you could review that. But the whole idea of viral marketing is that it's like, unfortunately, as we all know, like COVID, right? Like one person sneezes and another person gets it, and then they infect two other people, and each of those two people affects two people, and that kind of thing. So for B2B, it's very similar, but the product is different because it's fulfilling business needs, not consumer needs, right? So it's probably more something, about the process of the way their enterprise works, or some supply chain thing, or manufacturing. Somehow you're helping them and giving them some incentive to spread the word about your business and essentially recruit more customers for you. That's the concept. Okay. Yep. And here's Jason was suggesting kind of what I did there. Exactly. Get meetups and events. Yeah. Cancer, because you're right. As Jason's saying here, Dr. Kim, you're onto something clearly, right? Everybody knows somebody that's been affected by cancer, and not positively, right? There's a huge demand for what you're doing. It sounds like you just kind of need to get out into the world and let other people know, and find some life science investors. And like I said, at New Fund, there's a bunch of them. And I'm sure there are others, especially in San Diego. Okay. Let's see. Well, that's interesting. I didn't know Seth had a new book. This is Strategy. Okay, Jason. Thank you, Jason. You're a multiple contributor tonight. Thank you. Yes, and he's a big blogger for sure. All right, let's get to another question. What would be the best approach to property investors to help with financing flip projects or renovate to rent it out opportunities? Hi, Romano. Nice to meet you. I don't have a good answer for that, because I do some property stuff privately, but I don't know about property investors. This show is mostly about tech investors, or high growth ventures, at least things that might go public, and, kind of the Facebook and Uber sort of vibe. So I don't know specifically, but I think a lot of the things I said earlier about how to pitch would apply. Entrepreneurs always want to talk about the product and their vision, and investors, we want to hear about the business, and we want to hear the numbers. So if you have some numbers that are impressive, that's where I would start. And the more impressive they are, the easier it will be to get the meeting. And Romano's looking for contacts. So if anyone has suggestions for him, please chime in. Okay. Scrolling through the chat here. Okay, good. I'm glad to see you guys all talking to each other here. This is good. Where do I find investors? Okay, well, Sharon, that's a pretty big question. Depends a lot on. There's no one answer to that. So a quick answer, and then Omid, let's do yours, because it's more about investor timing. But Sharon, there are many different kinds of investors. So the first step is to realize that not all money is the same. If you want, as you just heard me say, there's life science investors, and then there's property investors, and then there's tech investors. I literally just said that, right? And all three of those are going to have different criteria of who they want to talk to and what they want to talk about, how much money they're going to invest, and for how long and on what terms. So you need to figure out what kind of money you're looking for, and then who has it. And then your job is to go make friends with them. And that's a key point, is that you want to build the relationships before you need the money, because by the time you need the money, you want them to already know and like you and trust you enough that they believe you. Otherwise, you're walking in cold with a business idea and just asking for money. And that might work at the bank. Like if you have a, good pay stub and a good credit score and say, I want $50,000 to buy that Mercedes, that might work at a bank. It will not work with venture investors. This is a personal business, and you need to build those relationships over time, which is fully admittedly unfair to people who are not from certain backgrounds. And it's more fair to people that look like me, who went to Stanford like I did. But that's why I do this, to try to help other folks. So I would, Sharon, narrow down your question, like be more specific, think more strategically, or I guess more tactically. What kind of investor, how much, for how long, what kind of business is it? And then work backwards from that, because there are probably, in almost any field, there are people that invest in that specialty. And even if there aren't, here's another insight from my next book, there are people that will, if you ask them right. And that is people that have made money in that industry before. So they may not have even think of themselves as investors, but let's say you want to open some dry cleaners. Well, go find guys who made money in dry cleaning, right? They get it. They will give you the benefit of the doubt, even if they don't know you, because they already understand the business probably better than you do, right? So that's a little shortcut that might be helpful. All right, so Omid says, when is a good time to start reaching out to angel investors or VCs? We've almost finished 60% of the minimum viable product, which is an AI-driven cross-platform app. Okay, very interesting. So Omid, the answer is yesterday. Get on with it. Absolutely. Because of what I just said, you need to have those relationships in place, right? Investors are not just sitting around with a checkbook waiting for somebody to walk in. They're doing their own research. They're building relationships. They target different markets so that they become experts in those industries. And they want to know everybody in that market so that they can beat the competition, meaning other investors, to the punch. So they're already looking for you, essentially. So you should be out at events and on calls like this, talking about your product. Go ahead, put the URL, if you're ready, into the chat room. Let people see. I mean, hey, everybody, Omid's got an AI-driven cross-platform app. Okay, anybody here interested? Right? I mean, that's how you do it. Like, get it out there. The world is a big place, and the sooner you start making noise, the better. So I would get out there, and I would start yesterday. Absolutely. And you're not starting right away just asking for money. You build a relationship first, right? It's that classic, people say, there was even a song about it, I think. You ask for money, you get advice. But if you ask for advice, you might get money. So go make friends, ask for advice. And 3 months, 6 months, 9 months from now, when you're really, really, really ready and you need the money, well, hopefully you're 6 months into a good relationship and they're willing to give you the benefit of the doubt and send you some money. Okay. Music says, what are the business values as an investor you would like to see in a pitch? I'm not sure what you mean by values, Music. Do you mean ethics? Like you want people to not cheat and to be honest and have integrity? I guess that's a given. I guess you must mean more like numbers. Well, it depends on the stage of the business. The bottom line is that you want to see every dollar that goes in come out multiplied in a reasonable amount of time. And it's often a surprise to early stage founders that, for example, like tripling my money is not that exciting, because if it takes 10 years, well, I can triple my money just in the stock market, right? So why would I do something as risky as to invest in a startup, which is most likely going to fail? So it depends a lot on your time horizon. And of course, it also depends on how much you're asking for. If you're asking for $50, no problem. If you're asking for 5 million, that's a different discussion, right? So I think a lot of it is about, again, researching the investors a little bit and figuring out what kind of return are they looking for. Most angel investors, I would say, just very roughly speaking, are looking for, I don't know, maybe 5 or 10x over 5 years. I mean, I'm really, really making this up. So any other people in the chat room probably have a better idea. But I said that because that contrasts with the VC's math. The math for venture capitalists is very different. they need like 10x or even 100x on their money because they invest in a whole bunch of companies and most of them fail. And they need one or two in each fund that they raise to pay back all the others and then some, and repay all their investors and leave some money on the table for them to get rich too. So they're really looking for home runs. So it's the media does all of you a disservice by emphasizing venture capital so much, because most venture capital firms are really only interested in like Facebook, Meta, or Google type moonshot stuff. Like they want billion-dollar companies. And if you can have a really good company that can make you very wealthy that only does 20 million a year, right? But if you keep 10 million of that after 10 or 20 years, you're doing great, right? But that's not a VC business. So you got to be a little bit careful. I hope that's helpful. There's a lot about this in my new book, basically, coming up. Okay. Kagate. Now, last time I saw you, you told me how to pronounce your name, and I know I'm butchering it. It's not Kagate. It's like Sigate or something. So next time I see you, you have to teach me again. He's from Turkey, and his name is beautiful, but hard for me to pronounce. Okay, so anyway, hey, Scott, is there a maximum valuation for pre-seed fundraising, even though you calculate your valuation as $10 million from your traction and competitors? Pre-seed fundraising. I guess not. I mean, maximum ever, right? I mean, because you've got these AI companies, right? If you've got a couple people who are certified geniuses and already did a bunch of cool stuff at OpenAI, and they haven't built anything, but they've got this track record, and they say, our company's worth, $500 million pre-seed, that still might work, which is crazy, but it's true. So realistically speaking, yes, that's not really your question, but I'm answering what you asked. So if you calculate your valuation as $10 million, yeah, 10 million. Well, it depends on kind of how much you want to raise. I mean, these are all moving targets. So I can't really answer your question. I remember your business is about helping international college students find housing here in the States, I think, or something like that. So you're talking about a software app that helps, right? Because a medical device may need a lot more money because it needs all kinds of FDA clinical testing and FDA clearance, and that can take years. Or if you're talking about hardware, like our friend Jeffrey, well, I guess his was a software play, not a actual phone. But if you're talking actual phones or actual hardware, that can be, or like defense tech, right? You're building tanks or something, right? That can take millions and millions of dollars. So yeah, the valuations are different. But yours is a software app-based thing, as I think I recall. So here's another way to look at it. Investors don't want to, a good investor doesn't want to take more of your company than they should. So you hear a lot of bad stories about investors like they're trying to take control. Of course, that's a bad investor, right? Because why would you do that? Unless you're going to run the company yourself, which you obviously don't have the expertise to do because you're the investor, you're not the founder, right? So any investor that's smart will want you to dilute yourself by, say, somewhere between 10 and 25% per funding round. Why? Because after 2 or 3 rounds, they want to make sure you still have at least 20%, if not 40 or 50% of the company, so that you keep working, right? If I'm the investor, I want you to be working your butt off. I want you working, killing it, right? Because you're going to make yourself rich and me too. So I want you to own a big chunk of it, you and your founding team together. We don't want you to get diluted too much. Like I was involved in a deal a few years ago where it was their second or third round, I forget now, but the team had sold so much equity that they were all together, I think, less than 10% ownership. So we had to recap the company, meaning recapitalize the company. We had to go back to all the previous investors and say, we want to put money in because we like this team, we like the idea, we like what they're doing, but they don't have enough stock in the company anymore to want to succeed. Why would they work real hard? Because they have such a small piece. And those are hard conversations because we had to go back to all the investors and say, hey, you know what? You put in this much and now we're going to say it's worth half that. And we're going to give your stock, that's a bunch of stock back to the founders. So that's a long way of saying if you have a $10 million valuation, you're probably not going to sell more than $2 million, right? Because you're going to do 3 or 4 rounds of this and you still need to leave 20% left. So maybe that's a different way to think about it that might be helpful. All right. What else we got here? I think we're getting near the end here. Okay, music says they got their answer. Good. Gregory says, my parent company generated $7 million in 2020 by digital marketing. Okay, good. Self-funded, good. Partners to move the company to higher returns. Okay, well, that's good news, Gregory. I'm not sure. That's a little non-specific, though. Do you mean investors? That's a longer discussion. Why don't you come back next time, and we'll have you. You can do a pitch, and you can explain the whole situation, because that sounds exciting. All right, and what do we got here? Dr. Kim says, yes, for with a little luck, but why give so much away? Yeah, that's right. That's right. Well, that's the math, right, Kim? Is to to tread that fine line. But yes, angels and VCs do think differently. So it's good to make sure you're aligned on those things before you get into term sheet negotiations, and also before you even target your investors. A lot of my recommendations these days, I've learned the hard way, is that founders need to reverse their attention. And I'm calling this a Fox reversal. You heard it first. This will be in my new book too. One of the Fox reversals is stop talking about the product so much and talk about the business more. And you heard that one already. But one of the other ones is stop pitching and do more research on investors, because you're wasting your time. So many founders waste so much time talking to the wrong investors because they didn't do enough research. All investors are not the same, and you need to get out. You need to get after it before you start emailing everybody, so you don't waste your time or our time. People wonder why they don't hear back from investors, because you guys don't customize the pitch, right? I get pitches all the time. Hey, invest in my beauty salon or my airplane company. Like I don't do that at all, So delete, right? So yeah, more running out of steam here. More what? More research. That's what it was. Okay, so I think we're going to wrap up here. Okay, one more. Jonathan says, how much what was that? I saw it. How much do new administrations affect investor attitudes and behavior? Are you aware of types of opportunities supported by the current administration? I think administration, you mean the federal government in the United States, John? I think you're trying not to say Mr. Trump's name, it sounds like. Yeah, they certainly can. Absolutely. As you know, everything's a little bit chaotic in Washington this week, so I don't have a great answer for that, but you can certainly see that things are changing rapidly. There have historically been major initiatives. Well, for example, crowdfunding, which we talked about earlier. Crowdfunding is an outgrowth of the Jobs Act, which was passed under the Obama administration, I think originally in 2013 or 2016. And that opened up the doors for crowdfunding in general, which is, I think, great, right? Then you have programs like the Small Business Administration, the Department of Commerce has lots of trade functions, of course. Yeah, there's lots of that. I guess I don't have a good answer for you, but they absolutely do. On the you said investors. So on the investor side, yeah, we have concerns for sure, mostly around tax law, or there are certain tax loopholes that are not loopholes, but regulations that are very helpful to venture investors. These are things like QSBS, Qualified Small Business Stock Exemptions, or Section 1202. These are things that allow, and the carried interest rules, which I'm sure you've heard about. Those are all things that matter a lot to how our portfolios are structured and how we measure returns. So they absolutely can affect. I'm not aware of any so far things that the new administration is doing to change any of those, but it could change tomorrow, right? Especially with Vice President Vance, they seem to be fairly sympathetic to the venture industry. So I'm hoping that stays that way. But stay tuned. I don't have a crystal ball on that one for sure. Okay, so then Music says, okay, that's a good question. How do I find your email, please? Okay, so here's the problem, Music, and I got to be honest here. I can't answer everybody's emails. So that's why I do these shows. I try to help as many people as I can. I get tons and tons of inbound, and I try to see as many people as I can to help them. If you really want to work with me, I have to charge for my time. I'm sorry. I just can't keep up otherwise. I have a life and a family and businesses I'm running. But you can go to that page, and that page talks about I do set aside time for private calls with a few founders each month. I do some advisory board work. I can do a video review of your pitch deck, though people really like those. They're very handy. That kind of thing. And it's all at this page, scottfox.com. It's my personal site, /work with Scott. And those cost money, right? Real money. So, but that's the only way I can control my schedule. And they come with a money back guarantee. And if and the profits from my books and stuff go to charity anyway. So I'm honestly not trying to make money off you, but I just need to manage my schedule. And I'd like to work with the people who are the most serious, right? So if that's helpful, happy to work with you too. And you can find contact forms on any of our websites, Startup Council or the scottfox.com and so forth. So I'm going to wrap up here with a big commercial for startupcouncil.org. This is the organization that I set up to help you, trying to very much accelerate everybody, right? Everybody deserves a shot at this, and not everybody has all the skills in one place, right? So you may be a brilliant doctor like Dr. Kim, right? But you don't know how to commercialize it. That's totally legit. Or vice versa. You might be a great biz dev or a banker type financial person, but you don't have a product. You need a co-founder, right? This is all a team approach. So I'm happy that you're here and happy to help you all, find each other and connect with each other. And that's what startupcouncil.org is all about. Like I said, there are going to be some new announcements coming out soon. I'm working on a new book as well. Hopefully this will be helpful to all of you. And again, if you're watching this on, please like and subscribe so we can increase our reach. And if you're watching this in the replay or you have questions later after you sleep on this, you can go to youtube.com/ScottFox and put something in the comments, and we'll be happy to try to help you out there. So nice to meet all of you who are new here. And of course, great to see all of you who are back. And we'll be back, I think, about 3 weeks from tonight. 4 weeks from tonight, I'm traveling, but we'll try to do it again in 3 weeks. So watch your inboxes. And if you're not already on the email list, go over to startupcouncil.org, and that's the place to be so that you can get all our newsletters and so forth and updates on all the cool things we're cooking up to help you. So thanks for being here. I'm Scott Fox. You've been listening to Startup Fundraising Office Hours. Tell your friends, and we'll see you again next time, I hope. Thanks for being here. Go get them.